In the subreddit r, Real Day Trading, a user named H. Selden 2020 made a post titled Your 10-Step Guide on Getting Started. This sub is full of incredible traders who aren't giving out these tips for a pump and dump at your expense. They take this all very seriously, and I would highly recommend you join if you have an interest in actual day trading. All of their links will be in the description.
I have written posts on getting started before, but I keep seeing this specific question. I have $1,000 or $2,000 or $5,000 and I want to be a trader. How do I get started? So I am going to write this out step by step. These apply whether you are starting with 1, 5, 25 or 100,000. 1. Choose a broker. Stay away from any mobile-only broker. You want one that you can use on your laptop, has a good trading platform. I like Thinkorswim, but interactive brokers, TradeStation, Fidelity, etc. are all fine. It just depends on what matters most to you. So do your research. Deposit your money and make sure you are able to trade options and qualify for margin. You also want a broker that allows you to use a paper trading account in real time. This is essential to learn before you make a single real trade. You need to learn a lot. This can take months. Most brokers offer free online courses for you to take. There are also plenty of books out there and plenty of videos that are purely educational, i.e., not trying to sell you something. Soak up everything. This is where you want to use your paper trading account as you learn how to trade, especially options. Try it out using the paper account set to real time. It is also important that you not put an unrealistic amount of fake money into this account. It should be similar to the actual amount you will be starting with in your real portfolio. At this point, you are just trying to get a handle on how to trade the following. Stocks, fairly basic, but learn how to buy and sell stocks. And while most advanced traders use mental stops, as a beginner you will be using real ones, so also learn how to set them, including OCO brackets. B. Options, since most of you are not starting with a lot of capital. Chances are you will be trading options a great deal. Make sure you learn everything you can about option trading before you ever spend one dime of real money making an options trade. This includes learning the Greeks, understand how premiums work, and what IV does to the price of your options. See option spreads. Correctly using option spreads are the best way to grow an account below 25,000. They are also one of the more difficult things to master, so spend a lot of time on these. This website is a good place to start. https://www.optionsplaybook.com/option-strategies, and as you will see there are many different types of spreads. I suggest getting most familiar with call debit, put debit, call credit, put credit, diagonals, covered calls, and poor man's covered calls. 3. Analysis. Up until now you should have been getting comfortable with the basics, but probably without much direction on how to choose the right stocks, when to enter and when to exit them. This is where technical analysis comes in. All of short-term trading is based on technical analysis. Long-term investing is focused primarily on fundamental analysis. But as a short-term trader, you really do not care what the fundamentals are behind the company you are trading. If you are holding a position for a few hours or days, it doesn't really matter to you what their PE ratio is, or how their future outlook was last reported. What does matter are the charts. You need to learn how to read the candlestick patterns, which indicators are useful, how to read the market, and of course, how to find the right stocks. Once again, I have recommendations in this sub on what resources you should use for this, but there are many out there. This part of your journey is probably going to be the most difficult to master. In fact, you will continue to learn and get better at it as you go along. Every great trader never stops being a student of analysis, and neither should you. 4. Choose a good scanner. All this knowledge is not going to help if you cannot find the right stocks. Most brokers comes with decent scanners built into their platforms, and there are a number of free scanners available as well. There are also a number of scanners out there that cost money. Some of them are very good. Once again, I have ones I recommend, but there are many out there that give you great stocks to trade every day. If you are looking to day trades, then you are scanning on a much shorter time frame than if you were swing trading. By now you should have a good idea of what you want to scan for as well. Most people will tell you to look for huge jumps in volume, which is always an important factor, but that mainly applies to momentum trading, which you should be avoiding. You do want stocks that have high relative volume, but you also want stocks that are strong/weak to the market, have high liquidity, have a buy signal. These scanners should also help you create watch lists and set alerts on charts so when a stock meets the criteria you have set, you will get notified of it. 5. Choose a journal. The three most popular are TraderSync, TraderView, and EdgeWonk, whichever one you choose. Make sure at the end of each day while paper trading you upload your trades to the journals and look at your statistics. You want to focus on your win rate, profit versus loss, and the types of trades you do well at, as well as the ones you tend to lose the most on. Categories like type of stock, time of day, week, trade size, type of trade are all important to note and study. These first 5 steps should take you at least 6 months, which means that is several months where you have not yet made a single trade using real money. And you will be tempted, particularly as you start seeing trades in your paper account making huge returns. Don't do it until your win rate is at least over 60%. Do not make a real trade. 6. Choose a strategy. Now that you have a good understanding of how to trade, and you have a decent amount of data in your online journal to see what is working for you, it is time to choose a strategy. There are many strategies to choose from, but there is one strategy you should not use: momentum trading, especially momentum trading low float stocks. This method of trading is unfortunately what lures most traders into this field to begin with, and it seems so easy. This type of trading is one of the most difficult strategies one can choose, and should only be done by people who are very experienced. 7. Decide on a community. Many people prefer to trade alone, excel at it even. For me it was fine, but I much preferred trading in a good community. However, there are many scams out there. 2 years ago, after trying many different groups, I finally found one that worked for me. It improved my trading dramatically. So if you are going to join something, make sure you choose a service that is not focused solely or mainly on momentum trading. Most of them are. You want a community that teaches a full 360 approach to trading. Be as pros in it, people that actually do this for a living, and make sure they are accessible. C has a great chat room. This part is essential. You want to be in a chat room that isn't a free-for-all, but rather focused on trading and led by actual professionals. Chat rooms that are mainly amateurs throwing out trades all the time can actually hurt your trading. D is filled with resources. Any community you choose that is worth joining will probably cost you money, so make sure they have useful resources, including scanners, platforms, and educational content. 8. Start trading. Now that you have chosen your broker, learn the basic of trading, understand technical analysis, found a really good scanner, used a journal to help you choose which strategies you want to focus on, and decided on whether or not you want to be in a community, you are ready to trade. Start small. I cannot emphasize this enough. If you have 2,000, then you are looking to perhaps do an option spread that costs 1.50 per contract and maybe do 2 contracts. You want to buy just one in the money call or put on a solid stock. The key to being successful is consistency, and that means hitting singles, not home runs. If you have 2,000 in your account and make 50 in a day, that is 2.5%, which is excellent. Learn to be okay with slowly growing your account as your skill level increases. So will your profits. Don't worry, in time it will come, but for now, settle for the small wins. 9. Set goals. Trading for a living is a business. Treat it like one. Set your monthly goals. While you should not focus on your P&L while trading, meaning you do not exit a trade because you are down or up a certain amount of money. You exit because the analysis tells you to exit. You should focus on it in terms of the salary you need to live off day to day. It is important to realize that if you reach your monthly goals on win rate, number of trades a day, and profit per trade, you will also reach your monthly target as well. Remember, the ultimate goal here is that at the end of each month you are going to be taking out the profit and leaving the base behind. By the time you reach this step, you should have a really good idea what type of profit you can expect from your strategy and base amount in the account. 10. Get an accountant. Some people can do this themselves, but you want to make sure you are using the best possible setup to pay the least amount of taxes. Do you qualify for day trader status with the IRS? Are you trading out of an IRA? Are you using an LLC or S Corp? Since this is going to be your business, make sure you have your financials in order. So there you go. Why do most people fail at short-term trading? Because they do not do any of these steps. They deposit money and try to scalp low-float gappers, or they try to buy a lot of options on the hot meme stock. Eventually, after losing enough money, they quit. That is why most short-term traders lose money. If one follows these steps, it should take roughly 2 years before you can expect to be consistently profitable. Even after doing the first 5 steps, you will lose when you start trading with real money. But if you are trading small like I suggest, it won't blow up your account. I know nobody wants to hear that it will take that long to get good at this, but think of it this way. How much time energy and money does one put into getting a job and working their way up to middle management? Years of school, more years of eating shit at a bunch of crappy jobs, working yourself to the bone to get promoted. All for what? A bigger cubicle, a VP title at a company that will fire you the moment they need to make cuts, to have bosses that don't know what they are doing. Trading for a living gives you financial freedom, the ability to make money no matter where you are, as long as there is an internet connection. No boss, just you in the market, having that life is worth the time and effort. And I can tell you, it is great. It is exactly as you would imagine it to be. I did the 30,000 challenge to show all of you this can be done, and I did it with full transparency, posting every trade live and making my trading journal public to not only teach everyone, but to make sure there is no question in anyone's mind that it was real. I doubled that account in 5 weeks and never once had a doubt in my mind that I could do it. It took me 5 years to get this point. The first 2 years of learning was pure hell, because I had nobody helping me. I want to spare all of you from that. So I urge you, if you are trying to figure out how to get started, do this the right way. There are no shortcuts. Follow these steps and start your journey. BTW, the goal of this sub is to help people learn how to trade. So please share this post with anyone you think needs to read it.
Please remember, this is not financial advice, as neither I nor the poster are qualified to do that. I also am not personally invested in the mentioned companies at the moment. I hope you enjoyed the video. Please like and subscribe, as I will be making many more videos about different posts from the subreddits.